NASDAQ, though, looking solid, about a third of 1% to the upside. We've had Sydney up and running for about 30 minutes now, just over that. It's not looking so good there, down about 1.5%, 41.63 and change on the S&P ASX 200. Karen Cho has the action. Good morning.
Good morning to you, Martin. Well, it's interest rate day here, and a lot of investors are staying on the sidelines ahead of that news from the RBA later today. The main index, the S&P ASX 200, is currently down 1.3% or 57 points. And you can see it's coming back after some fairly solid gains in the past couple of days. The main buying action today is in the major banks ahead of that RBA decision. Any cut, of course, would be positive for margins for the banks, and of course could create some extra demand for home loans and other types of loans issued by the banks. The big mover there is Westpac up 2.5% and St George Bank up 1.8%. We are seeing some selling in resource stocks today. A lot of caution after that very weak manufacturing index in the US overnight, and also news out of China suggesting that factory orders there is also slipping as well. We've also had some news out today from APN News and Media. This is one of the stocks that is moving high. It's gained another 6% today, and there are suggestions that some of the big media moguls in this part of the world are circling as the Irish billionaire is trying to sell his stake. Rupert Murdoch is one of the names thrown into the mix, along with the Seven Network today as well. Elsewhere today, we're watching James Hardie Industries. It earns the bulk of its money from the United States, from the housing market, and it said it had to actually close 2 production facilities because of the slump in housing. Now let's head up to Emily in Hong Kong, who's watching all the pre-open numbers. What's it looking like, Em?
Hi there, Karen. And we had quite a day yesterday. The Hang Seng Index rallied as much as 920 points, but a bit of profit taking. We managed to close higher, 2.7%. We get started this morning at 14,344. 8 shares gaining 3%, 6,806. I do want to tell you about shares of Johnson Electric yesterday taking a very big hit. This is after the company gave a trading update. This is a company that makes industrial micro motors. The company expects its interim profit to fall 43% to $46 million on a $29 million trading loss. Chairman Patrick Wang saying he expects a difficult market condition in the coming year. Today, I do want to tell you about shares of PCCW. They have been suspended since October the 13th, but its 2 largest shareholders, Richard Lee and China Netcom, reportedly reaching an agreement to privatize the company in a deal worth some $2.5 billion. Shares not held represent about 3.9 billion shares, or 57%, and it's going to be bought for about $5 per share. That is an 81% premium to the October 13th close there. You can see $2.90. Now, Singapore-listed PCRD has a 22.5% stake, which is controlled by Mr. Lee, and Netcom holds the remaining 19.8%. It needs 75% of shareholders to agree on this buyout plan. I'm going to have to leave things there for now. In the meantime, Martin, back to you.
Thank you very much, Emily Chan, our Hong Kong stock reporter. We are just hours away from the U.S. presidential elections. Maura Fogarty is on election watch, and she's going to talk to us now about, excuse me, what a McCain or Obama presidency means for Asia.
Yeah, to a large extent, Maura, that is going to depend on actually who is going to best handle the U.S. economy. That is the key question. The biggest challenge is going to be, of course, navigating what could be a very prolonged and deep economic downturn in the U.S. And the shorter and shallower the economic downturn is, the better off Asia is going to be, given that this region still depends so heavily on exports. The biggest beneficiaries, of course, is going to be China and Japan, the 2 biggest exporters in Asia to the United States and to the rest of the world. Now, Senator Obama wants a second stimulus package to jumpstart the economy worth around $175 billion, which includes a whole array of spending measures, including spending on infrastructure, as well as tax cuts for most Americans. On the other hand, Senator McCain also has some other tax cuts he plans as well, but he also wants to use about $300 billion, Martin, of that $700 billion bailout package that Congress passed to buy up troubled mortgages. He believes that that will help stabilize housing prices and thus translate into a direct stimulus for the U.S. economy without widening the deficit by too much. Regardless of who is the next American president, the fiscal deficit, now at around $450 billion US dollars, is definitely going to balloon by some estimates to $1 trillion next year. On the foreign policy front, both men don't have as big differences with respect to Asia as they do elsewhere around the world. McCain is seen as more likely to focus on traditional allies like Japan and on China's lack of democracy.
McCain's going to focus much more on traditional U.S. allies around the world, military allies. That means Japan, clearly there'd be a lot more focus on the authoritarian nature of the Chinese government. There'd also be a lot more focus on the military threat that was raised by China in terms of cyber attacks on the Pentagon, space warfare, ballistic missile weaponry, and all of that sort of thing.
In contrast, an Obama presidency is seen as more likely to engage Asia in a lot more dialogue, and especially so with China.
An Obama presidency for Asia is going to be pretty balanced, I think, in terms of trying to engage everybody, be multilateral. It'll be soft out of the box. The one thing you would certainly expect from an Obama administration that would be different is that they would focus a lot more in trying to continue some form of strategic economic dialogue with the Chinese government.
And trade, of course, is a central issue given the importance of the U.S. as a trading partner for this region. Mr. McCain has a very strong record as a staunch advocate of free trade. With Obama, it is a little bit less clear given his comments on NAFTA during the Democratic primaries, and especially in resisting the proposed free trade agreements with South Korea on grounds that that deal leaves U.S. auto workers unprotected. Nonetheless, Obama has publicly stated that China must stop manipulating its currency. In a letter to a U.S. textile group recently, Mr. Obama said that China's huge trade surplus with the U.S. is, quote, directly related to its manipulation of its currency value. To give you some context here, in the entire 8 years of the Bush administration, President Bush has refused to formally call China a currency manipulator. Mr. Obama's comments come in reaction to, of course, rising protectionism among the American public and in the U.S. Congress, and that, analysts say, will have to be dealt with regardless of who is in the White House.
I hope that one of the things which the next president of the United States will be prepared to take on is rising protectionist sentiment in Congress, and particularly the way in which that is directed towards China.
And as always, Martin, either way, you could see U.S.-China relations getting slightly more complicated, but we hear that, of course, every single time we get a new president. That shows you how important the China-U.S. relationship is to this entire region.
Indeed, indeed. Okay, stay right there. It's time to bring in Ross Feingold. He is Chairman Asia for Americans Abroad for McCain, live out of our Hong Kong studios. Also with us right here on set is Patricia Reed, member of Democrats Abroad Global Executive Committee. She's here on set. Also staying with us out of New York is Don Strasheim from Roth Capital Partners. All of you, good morning. In the case of you, Don, good evening. Ross, let me start with you in Hong Kong. More of us is talking about Senator McCain. Good on security. He's a free trader. He's also seen as more market friendly, and there are a lot of Americans that are investors, yet he's lagging in the polls. Explain.
Well, as you've been discussing, Senator McCain has a long history of being very outspoken in favor of free trade. He was a leader for PNTR with China. He's been an outspoken advocate of the Korean Free Trade Agreement. And I think as you see in the last 48 hours, voters are starting to come around to Senator Obama's anti-business and anti-trade positions. And we're looking for a big turnaround in the next 24 hours.
All right, Patricia, got to ask you here. I mean, we talked about this earlier on in the show. Was it just campaign rhetoric, him sounding a lot harsher on free trade, threatening China as well? I mean, what's it going to be like if and when he does get to the White House?
Well, I think Obama has demonstrated that he is a pragmatist. He has taken a lot of positions historically that he has changed on based on new evidence. And I think that one thing that we can be assured of is that Obama weighs the pros and the cons of any situation and makes decisions accordingly. I think a lot of his rhetoric during his campaign might just be that. It's very hard to tell. But I do think that he's going to do what's best for America and best for the middle class.
You know, the thing is, I mean, changing one's position based on the latest or freshest evidence sounds like a good thing on the surface. On the other hand, though, a lot of people might say, here's another candidate that says one thing. Once he gets to the White House, though, he does another.
Well, I don't think it's a question of flip-flopping. It's a question of really taking and we saw this during the economic crisis, right? McCain dropped everything, ran to Washington, made a lot of noise, actually didn't even get his own House Republicans behind him on the same bill that he was supposed to be promoting. So I think right now we're looking at someone who looks at a strategic long-term value, looks at the points that support the position he wants to take, and maintains that position throughout.